So my theory is liquidity is leaving cryptocurrency, it's leaving Bitcoin, it's not returning, and we want to know where it's going from this point forward. A theory here on the channel that I've been sharing for many, many years is, of course, the 18-year cycle. We're running into the peak, but where is the liquidity going? We've heard forever about the global liquidity index. We've heard about money supply. We've heard about money printing. We've heard about QT ending. We've heard about QE starting. And we've heard about global liquidity offsets. That's where you have the global liquidity and then you offset it by a number of weeks or days from the point whereby the liquidity is coming into the market, giving it time to feed through into the system. But it doesn't seem like any of that is having much effect on Bitcoin for the last 12 months as, well, the price is essentially where it was about 11 and a half months ago. So before I dive into that, I want to go through the short-term analysis because, well, we've seen a day up here. So why am I sounding bearish on it? I'm not trying to be bearish at all. I just want to pinpoint where I think things are going from here, as we haven't necessarily seen any sort of big drive through yet in the market. Doesn't mean that we can't see it, but are we going to see it at the same sort of rate that we have seen Bitcoin and the excitement come into it through every single cycle previously? We've seen Bitcoin run up thousands of a percent in 2021 to the peak anyway. We've seen Bitcoin run up thousands of a percent in 2017. And then, of course, thousands and thousands of a percent in 2013. Of course, things are getting bigger. We're seeing more and more money in the space. Therefore, there may not be as much money coming into Bitcoin. But I think for a good investment, it should still be keeping pace with other investments in the marketplace, traditional finance, your stock markets, stocks, potentially even precious metals at this late stage, and real estate, of course. And if it's not doing that, does it really matter if we do see an increase in price if it's not beating something else? So that's the question here. Maybe it's enough for you. That's cool. It has been enough for me for a very, very long time. But I thought it might be a good thought experiment to discuss that in a video today. So hit the like button, subscribe to the channel if you're new here. I do videos nearly every single day looking at the markets, crypto, Bitcoin, stock markets, the real estate cycle, precious metals, just bringing it all together so we can get a better picture of what's happening in the market. So as I explained, this is the global liquidity index. Where is that money going? Well, in the short term, we've seen the price drop for BTC and then in the last 24 hours, a nice bounce back. So we've looked at three particular numbers, the short term, medium term, long term for Bitcoin to get out of this rut and potentially go into new all-time highs. Otherwise, breakdowns occur. So to keep this really, really short and sweet, yesterday, not a bad day. We've got to close above the previous swing low, but for the 50% on the daily, 105,000 is key, ideally above 108 because that has been the support and resistance level through essentially the last 11 months, going back to the December top in 2024. And so if price remains underneath the previous highs, well, then we end up in a situation like last cycle where we saw new all-time highs, price came back under the tops, tried again, came back under the tops, and you start to get the sellers take more control than the buyers. And you start to see this drain of liquidity and it goes somewhere else. And you'll see this in a few of the charts that I'll show you really, really soon. A point is, this is really easy to do. And I think it should be part of everyone's portfolio if you are taking your portfolio seriously and you're looking to invest for the long term, just understanding where the money should go. You can look at it on like once a week, once a month, just keep it nice and simple for yourself. And you don't have to sit in front of the computer trying to day trade on a 15-minute chart, a 5-minute chart, a 1-minute chart, whatever it is, right? Just something more simple. Now, on the short term, 105, 108. Longer term, we need above 116 now. And if this is the low, as of 2 days ago, around 98K, then we look to the next level, roughly around 112. But I'm going to go up towards 116 because that's where the previous highs were and the support there that you could see before the market broke down. So two major numbers, 108, 116, then we can discuss any further upside from that point. If Bitcoin isn't able to do that, isn't able to get back to those levels, then I suspect this is going to be a bit of a dead cat bounce, a bit of a failed rally into those resistance levels, and then it'll come back down to test the low. One last number we need to keep a track of is the rise from the low, so looking at an overbalance in time and price, this is about $13,000 from this low to the October top there, 27th of October. So if the buyers can't push the price more than 13 grand from this low, then it's looking quite weak. 13 grand comes out roughly around that 112,600. So basically the 50% from this low, and it needs to get beyond that. So if it doesn't, that means they are weakening, pushing the price less further than what they have done previously, which is essentially a weak sign. So we definitely need to see this come back above the 112, 113, and then they have the double tops. That's why I keep remaining with those double tops, because that would automatically extend the buying pressure and give us an overbalance in price. And then we've got to get to the time aspect. So that's on the short term. This is at least healthy for the short term to come back. So if we get over it, great. Let's get into that bull phase above 116 from there. Otherwise, looking at rejections. Okay, so we talked about that. Now, a few of the other things we've seen for a short-term bounce here for Bitcoin, leveraged liquidations, pretty well similar to most other days, but this is the important point here. The long-short ratio has just gotten back to balance, and that was what we looked at yesterday with a potential short-term turning point. The differential was massive. It was 4%, and the USDT dominance also had a day down. However, it hasn't broken back below 5.2%. That's those previous tops. You got a double top here that the market has now broken through and is closing above, whereas it hasn't done that. It hasn't closed above 5.2 since the April tariff crash low. Also note this red line in the background. That comes from 2021. So it's a very, very similar pattern to this line here. And then the market bounced from there. This is for USDT, which essentially leads into a bear market for Bitcoin and cryptocurrencies. So in the short term, still waiting on price of the USDT dominance, so that liquidity to come back into Bitcoin and cryptos, breaking down to 5.2 and eventually this 4.75. That's those previous lows. Otherwise, we are on track to repeat what happened in 2021, 2022. Of course, we've got to get into 2022 for that bear market. Bear market, boom, runs higher, but along the way, those pullbacks are essentially lower highs for Bitcoin and for cryptocurrencies. You can see here with Bitcoin in the background, there are the tops, there are the lows for the USDT dominance, and you can see Bitcoin in the white here rallying. You got a low put in, it rallies into those lows, rallies again, and then of course it collapses and USDT takes off from that point. So still a bit of work to do here for USDT dominance and some of that liquidity to come back into Bitcoin and cryptos. Strategy continues to slide. It's had a day up, but it's had many, many, many weeks down. We could basically call it months now. And the last holding point here is about $230, currently sitting at $255. So if this continues, well, then even more liquidity is drained from Bitcoin and cryptocurrencies. But of course, I pose the question, well, I'm saying it's not returning, and I'm asking, like, where is this thing going? We know in the case of Warren Buffett, Berkshire Hathaway, that they're taking a whole lot of cash, and it's been increasing a lot in the last few years. But I've been very skeptical of this particular analysis that many people have been posting lately, because Berkshire Hathaway has been increasing their cash on hand ever since the lows in 2009, 2010. And they've just been going up and up and up. And recently, that rate has increased, but it's increased at a time when we've seen even more money printing happening. So I'm still cautious of this. Yes, they're taking more cash. They're sitting it on the sidelines. Maybe they're buying bonds. Maybe they're doing, putting money in the bank, getting a few percent interest. But we're also seeing money go into gold. So that's sort of where we're starting from this point. We're seeing money go over there. But I basically just want to stress that it's not as if you're just going to see all this money leave Bitcoin and just go dump into gold, or vice versa. Because I think that is a really, really dangerous thought, thinking that, well, if only 1% comes out of gold and goes into Bitcoin, we're going to see this thing skyrocket. Because at the moment, gold is now more than 10 times the market value of Bitcoin. And so you often hear those really simplistic ideas that if this happens, we'll get this money out of gold or out of the stock market and only 1% came into Bitcoin, it would have skyrocketed. But why would someone want to do that? Why would an investor want to do that? They're not doing that at the moment, and the charts are clearly showing that. There, you can see that more money has gone into silver as well. A few weeks ago, a couple of months ago actually, silver was very close to Bitcoin. It was actually underneath Bitcoin, and it has since passed Bitcoin and is now $600 billion in front of Bitcoin. That's what, about 30%. You got 600 billion on the 2 trillion. Correct me in the comment section if I'm wrong, but it's a lot of money there. Now, the strategy here is very similar to comparing your Bitcoin versus altcoins. And so if that's foreign to you or you hate that idea, get used to it, because that's essentially rotating capital. Now, I've talked a lot about this in previous videos or mentioning it, and this is how I trade my portfolio. I talk about it with members. If you're interested, check out TIA Pro, jump on the waiting list. It is coming out very, very soon. And in the meantime, you'll get free reports for the economy, Bitcoin, and cryptocurrencies. So it's a similar sort of strategy there, except where we'll also use rules to learn how to get in and out of the market. For now, we're just looking at where is that money going. And we can see from the Bitcoin dominance chart against, well, essentially the crypto market, if this is going up, then more money is going back into Bitcoin. If it is going down, then more money is leaving Bitcoin. And over this entire cycle, we've only seen Bitcoin dominance increase, with a few exceptions through November 2024 and recently here, June or July, August. And then it's rallied back from that point, now hitting, well, the 50% at 61.6. The other time was back in 2022. That was at the low from the 2 lows that Bitcoin had, the June and then the November low. But from that point, consolidated and ran higher again. So if you get the idea around the theory of comparing one asset to another, this is going to be really, really easy to you. And it's going to make life a whole lot easier when you're comparing your portfolio and what you want to do with your money next. So it's one thing to see that the trend is up and there's still further upside, but we also need to have any invalidation levels on the chart. So if this is a significant high that's forming, let's have our 50% and clear support and resistance. At the moment, we're only seeing a few percent down for the S&P 500, and it seems to be following very similarly to what happened 5 years ago in 2020. So it seems like the liquidity, or what the investors are doing, is almost identical to what they did after the big scare of 2020, COVID collapse. And they're basically trading the market almost identically to that time. And it's continued on. You can see it with the line chart here, the pullbacks, the rallies, and then the next pullbacks like we saw last month. So I think some of the money is going into the S&P 500 and is leaving Bitcoin. I don't think that's any surprise now if you've been following the channel for a little while. And even if we do see more global liquidity and we see the liquidity index turn up again, no matter which offset you're using, maybe this is pulled back this way or it's pushed forward that way, whichever one you're using, and you're seeing this liquidity tick up and it's just a matter of waiting a few more weeks, the charts are suggesting that more of that money is going outside of crypto, like it's not coming into crypto. S&P 500 is up, and we're seeing the breakout for the S&P over its logarithmic resistance levels, and typically Bitcoin tops before the S&P. 2013 was a top about 18 months prior to the S&P 500 topping. So Bitcoin topped, then about 18 months later, the S&P 500 topped, they consolidated, and then started to run again. The next cycle, the S&P 500 topped about 300 days after Bitcoin topped, so just short of a year. And then we know from the 2021 top, that was about 6 weeks that Bitcoin topped, then the S&P 500 topped on the 2nd of January. This time, however, we've seen it at least another couple of weeks. We're into those couple of weeks now. Some may think that the S&P 500 is going to collapse. I don't think that's happening at the moment. I don't think this is the end of the cycle just yet, as we've still got a bit more time left for the 18-year cycle to run into its final tops with the everything bubble. Real estate may have topped. You know, we've got the white line here that has continued to fall. You can see the tops, lower highs at the moment. The white line is your home builders ETF. And so that's just taking a look at what the market thinks of home builders and whether they're going to see more profits in the future. Of course, stock markets being forward thinking, do they think there are more profits left, even in the face of the Fed cutting interest rates? But we heard more of a hawkish result from Powell at the last meeting, and these interest rate cuts have now increased. So all the probabilities that we once saw down at 2.75, 2.5, they continue to move to the right of this chart, which means less cuts. And so we've got the December meeting coming up. They're still looking for another cut at that meeting. And then it's hold, 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 cut in June. So basically a cut in December and then a cut in June and then another hold. And then you've got September here. But that is quickly becoming another hold. And so the market is thinking that there's going to be only one, maybe two more cuts for this particular cycle. And you're seeing that with the dollar as well. We've seen this rally. It is a weaker rally, and we think long term we are going to see the dollar eventually come down. It's hit that first resistance level at 100, and it's putting pressure on risk assets. For example, Bitcoin and of course altcoins are getting absolutely slammed here with the US dollar rising. Now the market has also said that the yields are going to rise here and the bonds are falling. You can see we've got to a low point just a few weeks ago in October, and the yields have begun to rise, which suggests a couple of things. One in particular we're looking at is that they don't think the interest rates should be going down any further. The other thing is, well, Powell was essentially hawkish, and so they think the interest rates aren't going to be cut as much. So now you're starting to see the yields rise and the bonds fall again. And we did get to a bit of a turning point there in October, and there's been some pretty significant moves down. So the next thing we do is just look to support levels, and our 50% comes in around 114. So if we saw this breakdown, essentially that would mean that the yields are going to keep rising. The market thinks that the interest rates are either going to stay where they are or continue to rise a little. That is going to put pressure on Bitcoin, like we've seen in the past as well. I don't think it's going to happen immediately, but I think with that, where we sit in the cycle coming to the end and then higher interest rates and so on, that could be a little bit of a downplay here for Bitcoin and cryptos. And if it is already in its bear market, that's an if, then it's just going to be even worse news for Bitcoin. We haven't got to that point yet, so let's just keep a little bit positive. 108s, keep watching those levels, guys. 108s, 116s, that's a big one there for BTC. And so as we lead to the end of this peak, each of them begin to turn over. We think real estate cycle has peaked and is in the process of turning over. Gold is the yellow one here in the background. It's gone on an absolutely massive run. It has got a local top at the moment, at least what I'm calling a local top. I don't think this is the all-time high yet, as there's no confirmation of that. But essentially, we see the S&P 500 top after the home builders, and we know Bitcoin tops before the S&P. So we're pretty much in the midst of this bubble coming to a top, but where is the money going? Well, it's definitely not going into Bitcoin when you compare it to NVIDIA. So that's a really, really simple one, right? You can see Bitcoin versus NVIDIA. It had its big boom times back in early 2021. And since that point, NVIDIA has been the better asset to hold than Bitcoin. It's actually done a lot better. But would we have known that at the time? Possibly not. You know, the AI thing was just kicking off in roughly 2022. We saw a lot more news about it. And you can see from that time, the market had already fallen and it's been underneath its 200-week moving average and potentially is going a little lower. But let's look at something else like Tesla. Was Tesla a better hold than Bitcoin? Yes, if you're just looking at it from 2019, 2021, it's basically underneath those highs of 2021 now. And more importantly, the one that I'll keep referencing because you can see it happen in all of these charts is that in all these charts I'm going to show you, the tops for Bitcoin versus that next asset essentially happened either the peak of 2024, that March top for 2024, the big greed time, or around that November, December top. Since that time, it's basically Bitcoin has been weak against all these other assets. And so that is a fact that the liquidity isn't going into Bitcoin, or it's not coming back more than where else it's going. It's basically finding new homes. And sure, we can see more money being printed. We can see QE start again. We could see global liquidity. We can see interest rates fall, so on. But the result with all of these assets that I'm going to show you is that the money is going elsewhere in bigger droves. So you might see a little bit here in Bitcoin, but there's money. The money is going elsewhere in bigger droves. Tesla has been stronger than Bitcoin for this period. You can see there's one big boom up here for March, a quick little top there in April, and then it's been down since that point. Underneath it's 50% now and getting close to the 200-week moving average. So moving on to the tech sector, so the NASDAQ, and an easy way to read it is Bitcoin buys how many NASDAQ contracts. So that's what we're looking at, Bitcoin versus NASDAQ, and that's what this number on the side here represents. You can see it says 4. One Bitcoin buys 4 NASDAQ contracts, just like as simply put, because one Bitcoin's about 100 grand, one NASDAQ contract's about 25,000 points. Therefore, one Bitcoin buys 4 NASDAQ contracts. And so the point, I guess, I'm trying to drive home here is, although if this cycle does continue up for Bitcoin and we do see higher prices, it doesn't seem like investors are that interested. And the reason why, in my opinion, is because they're starting to get a little bit less risk on and more risk adverse as we lead into the peak. Do they know it's the peak of the real estate cycle? I doubt it. Not as many people follow this as, I guess, what you and I think, because you're here on the channel and you hear it all the time from me. But the big money, the trillions of dollars, they obviously have some idea about cycles. They have some idea about what they're trading and investing in and so on. Obviously smart people. But I don't think they're all expecting that it to be this type of the top, because in particular in the US, they don't really follow real estate as the primary driver of markets. In the psyche of the US, you guys can correct me if I'm wrong, it's very much stock markets, it's very much politics, it's very much the economy. So maybe one day everyone will get the hang of this. Until then, let's just keep following what the charts are saying. And so Bitcoin now buys 4 contracts. Before it used to buy 5.4 contracts, and it's continued down. It's below the tops of 2021, that's March 21. As you can see, the lower highs in October and November of 2021. And when this pattern starts to form, well, Bitcoin is in a much weaker position than these other assets. So we've already seen it on the stocks like Nvidia and Tesla, and of course that's going to represent itself here on the NASDAQ, being the tech sector. It's just an easy one to follow for, I guess, all of the tech stocks. Now it's under the 50-week moving average. There's your orange line here. And a lot of people are sort of waiting for Bitcoin to break down from its 50-week moving average on a weekly basis against the US dollar. But it's already happening on everything else. It's below it against the tech stocks. It's below it against the tech sector. What about the stock market, the S&P 500? It's below the 50-week already on the stock market here, and it buys about 15 S&P 500 contracts. So it's been underneath that for some time, and the top came in July. The previous tops there was the December, January, and then the big peak up here around March. Now it's also just gone underneath the 2021 highs. And you can see again, when that pattern formed, you had a lower high forming when Bitcoin was putting in its higher high. So we'll put a chart here of Bitcoin, put it onto a line chart so it makes life a lot easier, and just turn off a few other things here. You can see Bitcoin putting in its higher high there in the orange. Meanwhile, Bitcoin was not showing as much strength as the S&P 500, and we've had that again. Here is the high for Bitcoin, and another high, and another high, and another high. Meanwhile, it's starting to lag against the S&P 500. Okay, what about against precious metals? You've seen us post this one before. If you haven't, stay tuned. Keep following these charts up, because this has been one of the worst performers, Bitcoin against gold and silver. The price now is below where it was in the March peak. And if we look exactly where it is there, it's basically back to the correction into April. So as of today's value, I don't enjoy saying this because I don't want Bitcoin to be underperforming gold. I'd prefer Bitcoin to be overperforming, but at the end of the day, we've just got to follow the chart. Here it is today. It's at 26 ounces. So one Bitcoin buys 26 ounces, and back in January and December, so about 11 months ago, one Bitcoin was buying 39 ounces. So in a perfect world, it would have been better to sell all of our Bitcoin and buy gold at that point. Of course, we don't live in a perfect world. This is all hindsight. How do you do that? Well, we just have to watch for any weaknesses forming in the chart. Are we beginning to see weaknesses for Bitcoin against gold? And it's really going to come down to the ones that we are following. Now, we've seen that. We saw the lower high in January when Bitcoin put in a higher high. So Bitcoin was 108 in December, then 109 in January. Now it's put in a lower high for gold. And then again, it gave us more signs here. July, that was another all-time high for Bitcoin. And then August was another all-time high. It marginally put in a lower high here. Of course, gold was also going on its move, but gold was going on this move this entire time. Now, I'm not perfect here. That's why I'm going through these charts with you guys now to have a look at where the liquidity is going. And we've shown that with, well, the charts have told us, the charts have shown us it's leaving Bitcoin and cryptos. It's either staying in stable coins, like you can see with USDT dominance, like you can see with USDC dominance. And of course, this is combined with USDT as well. It's continuing to rise. Keep a watch out for 9% there. That's going to get a little bit ugly if it happens. Hopefully we get a rejection here and then more of that money comes back in and we get this possibly lower high like what formed last cycle, move up, pullbacks at the very least. But that money seems to be going elsewhere. And we're getting many, many signs here that it could be continuing that way for some time. Now you got the Bitcoin against gold underneath the 50-week, getting closer to the 200-week. It is getting closer to the support level here at 24.5 ounces. This double bottom, if this breaks down, then that double bottom fails. Low, top, low. And if that fails, then we could expect much lower prices. Last cycle, gold against Bitcoin or Bitcoin against gold fell 76%. It went underneath the 200-week. It was under there for quite some time. And it seems like the pattern is Bitcoin and gold, they're going to stay underneath the 200-week for longer each cycle. At least that's what's happened over the last two cycles. 2018 touched, then 2020 went under. 2022 into 2023 stayed underneath the 200-week for quite some time, and then now it's spending a bit of time above. So if we are running into the end of the cycle that at least that I've been talking about for many, many years now for this particular year, not saying that there was a top every year, that's BS, that's obviously nonsense that people do, perma bears do that. We're talking about specific time frame. We are beginning to see signs of that now, in my opinion. And if that's the case and precious metals are going to continue higher for this prolonged period, I think we might see less and less liquidity into Bitcoin and cryptos, possibly not much happening with altcoins as well, as they are just very speculative. They don't do anything apart from hopes and dreams and Twitter posts. They don't really do anything. Same deal for gold here, but, I mean, it doesn't do anything, but the world is using it as a bit of a safe haven in uncertain times, something that you don't use meme coins and altcoins for. Now, the last one I want to have a look at was silver. Underneath the 50-week since August, now sitting on 50%, getting very close, even closer to the 200-week than what gold is, and getting close to those lows there of 2024. That's when Bitcoin collapsed with the Japanese yen carry trade into those lows there, July, August, September, before rallying. Bitcoin now buys 2,100 ounces of silver, and at the highs, it was buying 3,400 ounces of silver. How far could this go down? Well, we've seen it go below the 200-week, about 75% as well. Top to bottom, 75% is pretty far down. That's at about 800 to 900 ounces. Say we got back to the previous support levels, that's about a 70% drop, so that's 1,000 ounces. So essentially a bit over 50% from where it is now. So I believe now more than ever, it's super important to have your plan in play. Know what you're doing with your portfolio through this uncertain period that we're about to enter. As always, follow us on the channel, like the content, and if you are interested in learning more about investing and rotating your capital through different assets at this stage of the cycle, check out TIA Pro. This will be launching very, very soon, in time for Black Friday, of course. Otherwise, I'll see you guys back here at the next video. Until then, take care and peace out.